Business credit has become increasingly harder for small business owners to obtain. The SBA says that less than 40% of small business owners who apply for funding actually get approved. However, this large percentage of denials isn't due to the common mistakes you think. In reality, majority of business funding applications are getting denied because of two major components. Getting approved really has nothing to do with what you're putting on these applications and everything to do with how you're preparing beforehand. So in this video, I'm going to tell you what you really need to obtain over 6 figures in business funding. But first, you have to understand what a lender is going to look for when you go to apply for funding. Think of the whole application process like a professional job interview, but for your business. You want high limit funding, right? Well, you wouldn't show up to a high paying job in a Nike sweatsuit, would you? You would probably make sure that you look presentable, professional, and like a legitimate candidate for the job. Well, the same goes with obtaining business credit. Lenders want to make sure that your business is legit, professional, and appears to be established like someone that they would want to do business with. Long story short, your business has to look the part. And this 7-step formula that I'm going to explain to you next is the foundation of building your business so that it does exactly that. The first key to obtaining business funding in 2025 is what I call the perfect business structure. And the first step to the perfect business structure is to officially form your business entity. And you can do this by properly filing your LLC and your EIN documentation. As far as your LLC, you can easily file this on your state's Secretary of State website. Usually it only costs us a few $100s and it's a pretty simple process to follow. And for your EIN, you can apply for this for free on the irs.gov website. This is also a pretty simple process as well. Now, there are a few things that you want to keep in mind when you're filing these documents. Number one is that all your personal and business details match on both documents and that there are no errors like spelling or grammar throughout the documentation process. Also, because your end goal is going to be to obtain business funding, you do want to avoid high-risk industries and business names. There are certain business types that lenders and banks are going to automatically red flag and deny or give you lower credit limits for, so you want to make sure that when you go file your documentation, you avoid any names or details that are going to point to any businesses that are considered high risk. The next thing you want to keep in mind when forming your business entity is making sure that you don't use your home address as your business address on any documentation. Once you start going for funding, lenders are going to see your address and actually look up your business to see what type of location you have. A lot of times people put their home address, so when a lender looks it up, they can easily see that this is a residential property and not a real business. So that's definitely something you want to avoid. And you can do this by using what they call a virtual office. And the provider that I use for my virtual office is called Regis. Essentially what Regis does is provide you an office building as well as a service to not only serve as your business address, but they also receive mail on your behalf as well. You can either go directly to the building to pick it up, or for an extra fee on top, they can actually receive your business mail and then forward it right to whatever address that you want to receive it at. This is a great strategy to not only make sure your business looks that much more legitimate, but a great way to stay organized as well when it comes to your business mail. When you're doing these business funding applications, lenders aren't just looking at your business address either. They're also looking at the other details that you put of your business, like your business phone number. They definitely want to know what's going to be the best way to get in contact with you, and if that's something like a landline and it goes to like a personal phone, or if it's a real business number. So the next step is make sure you have a separate phone line and number for your business. This way, if anybody reaches out to your business, whether it be a lender or a customer, it goes directly to a business line and it doesn't get confused with all your personal calls. And realistically, adding an additional phone line to your service isn't even that expensive anymore. I was able to add an additional line to my service for about $40 extra, but you can also do a toll-free service like Grasshopper as well. Now, your very last option is going to be using a free service like Google Voice. Although I definitely don't recommend this, I have seen people get funded using a Google Voice number. But why take a shortcut if we're looking to build the perfect business structure? And since we're in 2025, you have to know that lenders are going to be looking to see what type of digital footprint your business has as well. And this pretty much just entails anything that pops up when someone goes to look for your business online. This not only adds legitimacy, but it also adds discoverability as far as potential customers being able to find your business as well. So I recommend increasing your digital footprint by making sure that your business has a domain and at least a small website landing page. And all a domain is a .com for your business that you can easily get for $10 to $15 at GoDaddy.com. And once you get your domain.com name, I would recommend attaching it to at least a website, a small landing page at minimum, which at least shows your business details, including your address, contact information, and something that describes what your business does, like a mission statement. Using GoDaddy and a basic website builder like Wix, you can literally increase the size of your business's digital footprint for less than $30 a month. And this is definitely going to be a factor that comes into play when you go to do applications to request funding from lenders. And if you haven't recognized, the theme here is all about making your business look more established and legitimate whenever lenders go ahead and search for it when you're doing these applications. And this next step is another building block in case lenders do a deeper search for your business. And that is making sure that your business is listed in all public records and 411 directories. Number one, you want to add your business to Google listings, and you can do this for free. This is just another online component of your business. Number two, to add yourself in the 411 directories, you can use a service called listyourself.net. Listyourself.net works with over 90% of directory providers and publishers across the country, and they allow you to put your business in their directories for free. Now, completing these first 5 steps are going to build the basic building blocks of your business to obtain the perfect business structure, but there's still a few more steps to go. Lenders also want to know how you're currently handling your business, which means they're going to look at not only the accounts you have with them, but accounts that you have with other institutions to make a judgment on how trustworthy you and your business are. So the next step here is to make sure you open and maintain a business bank account in good standing. And as far as business banking relationships, I would recommend that you have a business bank account at least one regional bank near you and a national bank as well. Having a relationship with a smaller bank that's closer to you, as well as a national bank that deals with a lot of businesses, are definitely going to be beneficial to you as you move forward to start obtaining and building your own business credit. And if you're a business owner who is also working on their personal credit on this journey as well, I would also recommend that you have a business banking relationship at a credit union as well. Most credit unions are going to value the relationship you have with them over your credit score. And a lot of times they're just more customer focused than a lot of these other for-profit banks out there. It may sound cliche, but one of my favorite credit unions still is Navy Fed. I have a great relationship with them, and they've given me high limits on all of my products, whether it be on the personal side or the business side. So that would be definitely a great relationship for you to start if you're just beginning. Now, much like on the personal side, businesses also have their own credit ranking system, which means they also have their own credit bureaus to track them. The purpose of these bureaus is just to report your company's data to other businesses who may potentially be doing business with you. Now, there are some credit bureaus that work in both the personal and business side, like Experian and Equifax, but for here, we want to focus on the bureaus and reporting agencies that are exclusive to the business realm. And the biggest one on the business side is going to be Dun & Bradstreet. So after you get your business bank account, the first thing that I would recommend you do is go ahead to the D&B website and apply for your free Dun & Bradstreet number. I've seen some people say that Dun & Bradstreet isn't as important anymore, but I would beg to disagree. I mean, why wouldn't you want a built-out profile on the biggest business data reporting agency?
Hello?
This is just another data point to show lenders that your business is legitimate and trustworthy. Oh yeah, and shout out to D&B for showing support to the channel over the recent months. Now, the perfect business structure may seem complicated, but if you lock in and stay disciplined, it's definitely doable. In the case that you think you still need a little bit more hands-on help, make sure you hit the link in the description below and schedule a call with me and my team to see how we can partner with you to help you obtain as much business funding as quickly as possible. Let's get it. Even though your business structure is the foundation to building business credit, there is another component that lenders have started taking very seriously now. Not only do they want to see that your business is legit and established, but they also want to know that the person running the business is trustworthy as well. When I first started applying for business funding, I ran into a lot of difficulty because even though my business was properly structured, when I went to apply for funding, lenders would frequently request to see my personal credit report as well. I realized that with smaller and newer businesses, there aren't going to be many transactions, statements, and business documents to go by for these lenders to make an approval decision. So they're ultimately going to judge the business's lendability by the business owner's personal credit history. That's why the next crucial step in building business credit now is to have a well built out personal credit profile. The baseline to having decent credit has increased. I used to see banks approving applicants with mid 600 credit scores. Not anymore. Most banks and lenders nowadays are looking for, at minimum, a 700 credit score. And honestly, between me and you, we not letting nothing under a 700 credit score slide this year. And the way that you get to a 700 is understanding the elements that make up your credit score. And the first element is going to be your payment history. When applying for business funding, you want to make sure that your personal credit profile doesn't have any late remarks, collections, charge-offs, bankruptcies, or any other negatives. A clean personal credit report shows lenders that you're responsible and can manage debt. The next crucial element to your credit score is going to be your utilization. Before applying for any funding, you want to make sure that your credit utilization is under 15%. I would really aim for 10%, but at least 15 before you do any applications. This shows lenders that you aren't just maxing out your cards and relying on them to live, and that you can pay back your balances at a healthy rate. The next element to a well built out personal credit profile is having good age on your credit history. This is pretty much just the average age of all of the accounts on your personal credit. The older the age, the better.
Old.
A shorter credit history can indicate that you're new to the credit game and may be a little bit more risky to lend to. But if you're able to get the first two elements of your profile in order, if you have all of the negatives and utilization down, I would say credit history is easy to fix on a profile because you can just add authorized user trade lines, which is essentially adding you to other cards that have a longer credit history. And by being added on these cards, this in turn will lengthen your own personal credit history. Next, you want to understand that the type of accounts on your personal credit profile matter as well. This is what's referred to as your credit mix. Lenders want to see different type of accounts being reported on your profile, whether it be revolving, installment, you want to add credit cards, auto loans, mortgages, all of these type of accounts, even student loans, add to a more diverse type of credit mix. You want to make sure you have 10 to 12 of these different type of accounts on your profile just to make sure you look as lendable as possible when you go put these applications in. And if you have a thinner credit profile and you need to add some more accounts, no worries. These are a few ways that you can also do that as well. The first option is adding credit builder loans and cards to your profile. These are cards that are specifically made for people trying to build up their credit profile and score. Next, you want to start getting into secure and unsecured credit cards. These are revolving accounts that pretty much show that you can manage debt when it's given to you. The next type of account that can really have a good impact on your profile is going to be what they call a pledge loan. Navy Fed has really made this type of loan really popular in the last couple years. Essentially, a pledge loan is just a secured loan. You giving the bank money, which they'll in turn lend back to you, pay off 90% of that loan, which just leaves 10% that you pay off gradually. But ultimately, this looks like a 90% paid off loan, which is a great factor on your personal credit profile. Another great way to get some accounts added to your profile is to get your rent reported to it as well. You can use a service like Rent Reporters to do this. As long as you're paying your rent on time, Rent Reporters will literally put that as a trade line on your personal credit profile to show lenders that you're responsibly and on time paying back this account. And lastly, as I mentioned with your credit mix, adding authorized trade lines as far as credit cards with higher limits and longer history is also a way to get more accounts reporting on your personal credit profile. If you just started building your personal credit or just got it repaired, these are definitely the steps you want to take along with applying the perfect business structure to make sure you get as much business funding as quickly as possible. Now, I will say putting in the work to build business credit and going through this process can definitely be a journey, but it's one that I went on myself. And now that I have over a 750 credit score plus over 6 figures in business credit, I'm here to tell you it's definitely worth it. But with that being said, there's still one thing that most business owners overlook when it comes to obtaining business funding. Lenders are looking at more than your credit score in your business when it comes to making a decision to approve or deny your application. They also want to know that you're going to be a long-term customer of theirs and that you can pay back that debt over time, and that you're just not here to come in and run off with the money that they're giving you. And this is why your relationships with your banks and your lenders matter so much. Even if your business is brand new, you can start to strengthen up your relationships with your lenders by opening up checking and savings accounts, setting up automatic deposits, and making transfers into your business accounts frequently. This shows your lender that you're serious and invested in building a real relationship with them. This is only going to benefit you in the long run and help build more trust for your business. And when it comes to business funding, you want to build as much trust as possible. Here's the catch. Lenders are starting to prioritize one crucial factor above everything else. And most entrepreneurs don't even know what matters or how to avoid it. If you want to know exactly what that factor is and how you can use it to still get approved for business funding, make sure you watch this video next.